2019. We do have a quorum here, and we are lucky enough that Mr. Rogers is here tonight, and he's going to go over everything. I believe that everyone got the emails that I sent out just explaining to you what he was going to be going over, so you would have a heads up beforehand. But Mr. Rogers will, number one will be the discussion and action, the approval of the Berkeley LSIG renewal for school board liability, including employment practices liability, employee benefit liability, and limited sexual abuse liability coverage, commercial auto liability, and general liability for a one-year policy term. Mr. Rogers.
Thank you, Madam Chair, and Mr. Vice President, board members, Mr. Downey, good to be with you tonight. And I appreciate the opportunity to meet with you. As we had discussed some along the way, a lot of times I come to deliver pleasing news, and this is one of those years where it's not so pleasing, but I want you to have confidence that what we have is the best terms that we could possibly negotiate, and I assure you there has been a lot of negotiating going along. On page 2, you can see that the premium increase is significant, as was anticipated, and but it is significantly better than the next most competitive quote. And so we were very fortunate there. The next best quote we had was actually more than if the board renews this with Berkeley and exercises the option on the excess liability. So I guess what I'm saying is, I know you have indigestion, but it could be worse, could be worse. And so if we go through the proposal, I've got page numbers at the bottom right. Just a quick reminder, like we do every year, the named insured on this policy is Bossier Parish School Board. This coverage is not designed to protect other organizations, even though many of them try to do very good things to help us. So booster clubs and other clubs that are not our student clubs officially sanctioned do need to buy their own insurance, and it's been that way from the beginning. If we go to page 4, I want to point out one change that we have on the general liability. In the previous years, when we added the student practicum program liability coverage, we had the $2 million aggregate limit, the $1 million aggregate limit. We've been able to increase that to $2 million. And this is if we happen to have an employer who our kids in vocational or other similar programs, vocational education, if they work for them and we have to offer additional insured status, this is the endorsement that allows us to do that. And we do still have the $2 million primary limit and a $5 million aggregate. As a reminder, that just means that it'll never pay more for a general liability claim than $2 million, but it'll pay up to 2.5 of those claims if we were to have something unusual happen. Defense is outside the limit on this coverage, so it does not reduce the amount available to pay damages, and we do have the same self-insured retention of $100,000. And I'll be glad to entertain any questions that any board member has on this portion of it. Okay, well, let's go to page 5. This is our what we would call our wrongful acts coverage. We have the school board liability, employment practices liability, and employee benefits liability. You can see that we still have the $2 million limit there. Also, defense is outside the limit, so again, this does not reduce the amount available to pay damages when you have to pay for defense or other loss adjustment expenses. On this one, it will pay up to 2 of those claims, and we have the $100,000 self-insured retention. On the limited sexual abuse liability sublimit that's a part of this policy, last year what we had was the $2 million for each act. And as a reminder, an act is a series of acts committed by the same perpetrator or perpetrators in conjunction with one another. What was different last year is on the aggregate limit, we had $3 million, which would mean we could suffer one severe claim, still have another $1 million left over. $2 million was the maximum that the insurer would consider, and so that means we have one silo of $2 million available for that type claim. This coverage is different in that it is, the amount available for damages is reduced by loss adjustment expenses, including defense. So that's a material change, in my opinion. We're very fortunate, though, to have that $2 million limit this year. Any questions on this? Okay, let's go to page 6. This is our auto insurance, commercial auto. We do have the $2 million each accident liability limit, the same self-insured retention that applies to all of these liability coverages. Defense and loss adjustment expenses are outside the limit, so they do not reduce the ability to, or the amount available for damages. And as before, the board has historically devoted its premium dollars to items that were its liability. Accordingly, with that, we have rejected uninsured motorist bodily injury. And I'll be making that same recommendation to you this year. And as before, I just wanted to remind you, I also included this little slip of 2 pieces of paper at each of your spots. It's important that we actually authorize the signing of the rejection form. And so this wording that's on this, titled automobile liability, if it's the board's pleasure to follow my recommendation, will actually need to be read into a resolution after we take action on this, read into the minutes verbatim, and then I'll get with Ms. Carrier, and that will also be published in the legal journal. Do we have any questions on that? Okay. Then we get to, well, this is page 7 is the same thing that I just showed you. So after page 7, that will actually be another action item. So Madam Chairman, my recommendation is we accept the offer for a 1-year term made by LSIG Pool, which is Berkeley Insurance Company, and rejecting uninsured motorist. Any questions? I'll be glad to entertain any questions.
Madam Chairman, I'll make a motion that we accept the recommendation of Mr. Rogers regarding this particular policy.
Do we have a second?
Second.
Okay, we need to vote. All in favor? Okay, so passes.
Thank you. And so the next item of business would be, if the board agrees with my recommendation to reject the uninsured motorist bodily injury, this top one that says automobile policy on top of it, we would need someone to make a motion to pass a resolution with this language.
Okay.
Madam Chairman, I make a motion to reject underinsured motorist bodily injury and property damage coverage from the automobile policy, and further move to authorize Mr. Frank Ruggiero, Chief Financial Officer, to sign on behalf of Bossier Parish School Board to reject underinsured motorist bodily injury and property damage coverage from the automobile policy.
Do I have a second?
Second.
We have the motion read by Mr. Bullard and the second by Mr. Bass. All in, do we need to?
Mr. Bass is not a member of the committee.
He's not a member of the committee, he can't.
Second.
I thought he was. Okay, second by Ms. Smith. I'm sorry, Mr. Bass. All in favor? So pass.
Thank you. The next item will be the driver's education physical damage insurance. You will see that the premium is down. In fact, it's down substantially, but I don't want you to get excited about this because that premium is a moving target based on the number of autos that the board has in its possession for driver's education. They're added as they're picked up from Red River Motor Company. They're deleted as they're returned to Red River Motor Company, and the premium earned is just the daily rate. So on this, on page 8, what we do have is a $1,000 deductible on the physical damage. The reason we don't have a larger deductible is because the premium is small enough, it offers the board no return for taking a bigger deductible. And as a reminder, under the notes that's in yellow, these vehicles are the only ones that the board purchases physical damage coverage for. The board has saved significant funds by self-insuring the physical damage to its units throughout the years. But I always need to remind you, of course, if we were to have a tornado strike at the resource center or transportation center when they're all parked there, it's not that we don't have an exposure for it, but it's been within the board's risk appetite in the past. Several years ago, we looked at the possibility of buying that coverage, and if I recall, it was going to cost us the equivalent of about 1.5 buses every year to insure it, for a limit of about $5 million. And if we ever had a really serious claim, of course, it would probably exceed the $5 million. So the board at that time decided not to purchase it. If the board ever changes its risk appetite and would like me to offer this coverage again as an option, I'll be glad to at your direction, but that's just a comment. So that concludes that presentation. Are there any questions about the physical damage on our leased autos? Well, if not, Madam Chair, I would recommend that we accept the offer, and I want to make sure I get my name of the insurer just right. Great Lakes Insurance for 1 year for the physical damage of our leased driver's education vehicles.
So moved.
So what premium is on that? $56.62.
Yes, sir. $5,662 last year. At the time I presented it, it was $9,300. But again, I don't want you to get excited about that. It just so happens we had fewer autos at the time this quote was given us, so that'll be adjusted. And as a reminder, a few months back, I gave the board a detailed email about what the total cost for the driver education vehicle program is, and included in that was about what this coverage cost us each year.
I have a motion by Ms. Smith. Do I have a second?
Second.
I have a second by Mr. Bachhaus. Please vote. So passes.
Okay. The next item that I'm presenting to you, and I'm going back to page 2 where we have the premium summary because I want to clarify this before I ask the board to take action. I'm presenting an excess liability option to you, and you can see that the premium for that is just under $151,000. And then there's a second option with excess liability, and that is an additional premium of $18,302. It would not be an additional $169. I'm just showing you what that total cost would be if you accepted it. The first option that we're going to talk about is a priority 1 item for me. The second option is more of a priority 2 item for me, and I'll be glad to discuss that more when we get into it. So I'm going to jump on over to page 9. And so excess liability, as a reminder, would go over our auto insurance, our general liability insurance, our school board liability insurance, employment practices liability insurance, employee benefits liability insurance, and sexual abuse liability. And if you take the second option that cost an additional $18,000, what that would do is plug a hole of about $1 million on our employer's liability portion of the workers' compensation. I can get into a detailed explanation later if we have any questions about that, but I know either way this is a big bite this year, and so the first part is clearly my #1 priority and my recommendation to you. So this is offered by a syndicate at Lloyd's of London, and you'll see it looks a little odd, $2.9 million in coverage. The reason for that, and it's kind of unique to Lloyd's, but they take our $2 million underlying limit plus our $100,000 self-insured retention, and then they pick up excess of that. So if the board were to purchase this coverage, when you consider your $100,000 self-insured retention, it gets you to a total of $5 million. I know it looks funny, but that's the way Lloyd's does it. So on here, the main point I want to, there are two real points I want to make to you. Number one, the fact that it goes over all of those different coverages in your underlying program. But the other part is this is a single silo of coverage. So if we buy it, we have one big tower of $2.9 million. It's not $2.9 million, and then if we have 5 claims, it pays $2.9 million times 5 claims. It's just one of $2.9 million. Based on the school board's results, I would not expect us to have that, more than one serious claim, but that's the way umbrellas and excess liability work, so I just wanted to make that extension, that comparison for you. Also, I noted some exclusions down on page 9 under item 8. And of course, this excess liability would have all the exclusions and limitations of the underlying coverage. And then they add a few. And so I want to be real clear that it's not designed for us to, it's not designed to go over desegregation type claims, religious liberties type claims. It does not reach down to go over our cyber. But the reason for the first two is just because though compliance with federal law is considered by insurance to be an intentional act, and they're not going to get into something that we have the ability to control. And so that's why that is there, but because it has been an issue, I wanted to point it out to you. But most all of our claims where it includes money or damages, of course, are not those kind. Normally those are enforcement actions, okay? But let's see. Then I go over to page 10. I think all of you have seen these, so I'm not going to read through it. But I gave you some examples of practically how this would work. And then I'll close on my presentation with this, that if the board buys this coverage, even if the board were to buy it for 100 years, literally 100 years, it would still pay for itself, even if we only had one claim that used this limit every 19.2 years. That's our break point. If it was priced at every 5 years, I would say that's probably not a good bet. But, you know, we tend to look back at the last 100 years. I don't think we can project going forward the next 100 at all. But I think it is safe to say that whatever we experience in the future is probably not going to be like our past was. It seems to be a new world with new exposures, and so that's one of the reasons that I recommend this. And then if you were to ask me, well, how do we compare with other public entities? I would say that we would be very much in line with increasing our insured limits, verdicts, and well, I'm not going to try to speak for Will, but I can tell you that both Bo McNeely, John Geis, and I think Will concurs, but if not, tell me that even against public entities now, juries seem to be awarding larger verdicts. And so I don't think we can count on being insulated from the rest of the world anymore on that. So with that, I will conclude my recommendation, and if the board were to consider this, then the next item would be to do another uninsured motorist bodily injury resolution for this policy. But Madam Chairman, my recommendation to the board is that it purchase this option offered by Lloyd's of London.
Open to questions, comments. Mr. Bullard.
Thank you, Madam Chairman. Question for Mr. Rougeau, and I apologize. I dropped the ball. I should have looked it up and completely overlooked it. Are we our budget for these items? Will we stay within budget, or are we gonna break out of budget for this 150?
Yes, sir. If we look at each line item in the budget, it totals about $600,000. Of that amount, I have built in for different small claims that would be within our self-insured retention for both transportation, and generally transportation is the one where we have, you know, several small claims during the year, not so much with general liability, but we have 600,000 total budgeted. So depending on how the board, what you choose here, we would most likely need to adjust the budget to accommodate, which we can do. I think we have some cushion built in to be able to help in matters like this.
Thank you, Mr.
Yes,
Ruggiero. I'll make the motion that we accept the excess liability.
Let me be sure I'm straight. Option one?
Option one, yes.
Option one? Any discussion about option two? Dennis?
I don't know, can you just kind of explain how that covers that $1 million area you said that?
I can, and it's a good question. So in Louisiana, as most of us know just from practical experience and knowing someone who's been injured on the job, by state statute, workers' compensation is virtually unlimited. Now, care providers do have certain amounts that are approved that are used for surgeries or different things, particularly with hospitalization. So there's some guidance on how much providers can cover, but literally, if a claim were to be terrible and somebody has a debilitating lifetime injury and it's $30 million, the insurance company has to pay $30 million. That's the way it works. Now, there are some cases where employees would try to sue you for what really is tantamount to punitive damages. Let's say if we put them in an unsafe work environment, withheld critical information that really resulted in their injury. Over in Texas, it happens all the time. Employees collect their benefits and then they sue the entity too, and it's litigated just like a third-party liability claim. In Louisiana, and again, Will, correct me if I get out of line here, you're the attorney, not me, but in Louisiana, it's a very difficult standard for employees to collect for more than the statutory benefits. It can happen, but we have a very liberal statute where even if people do things that they shouldn't do, that are even against policy and against common sense, if they do it at work, normally unless drugs or alcohol are involved, their claim is paid. The trade-off is that's all they get. That's kind of the social part of our work comp law. But let's say if we had something terrible happen, and I pray it never does. We see on the news what kinds of things result in mass casualties at school, and let's say we had a bunch of employees that were injured in a particular act. And if they were to sue the board for more than what their work comp entitles them to, and if their allegation is that we did not present a safe work environment for them, whatever it happens to be, what we buy right now is $1 million, okay? And so we would have $1 million available, and a lot of that would probably be for defense. And I would not be defending us. Will and I talked about it a little bit before too, so again, correct me, Will, but I mean, the Bossier Parish School Board has done a lot beyond the standard of most public school districts in that we have school resource officers at every school, but it doesn't mean somebody couldn't sue us. So we'll hypothecate that, or hypothesize, forgive me, that they were to do that and they were successful and they get the work comp benefits and they get more. Well, right now we've got $1 million. This, I did negotiate for this to go above that portion of the work comp policy, but it still doesn't pick up until $2.1 million. So if we were to have that bad thing happen, which is a lot less likely than the other kinds of claims that we see happen, then the board would have to pay that 1.1 million between what the LUBA policy stops paying and what the excess liability policy would pay, okay? And if you wanted to cure that and ask LUBA to bump it up to 2 million, it cost $18,302. In a perfect world, it would be easy to do, but I know this is a very difficult decision for the board, having an increase in our normal insurance plus being asked to buy excess insurance, because it's much more less likely to happen. That's why the first option is my priority number one. I really believe the board needs that. This would be if we really have, we're not in a crunch, we want to sew up that loose end, we could spend the $18,000 to do it. But I agree with Mr. Rougeau for the self-insured retention expenses that are a part of that budget item. It's probably going to be realistic that that budget has to be amended. So if you were to do that and you wanted this, you're just going to have to know that 18,000 of it's going to go to this premium charge. And so does that kind of explain the scenario where it could happen? The other thing could be group transportation. We got a group going to Baton Rouge and there's a severe accident and we're at fault. We have all those employees injured, and come to find out we had a driver driving who shouldn't have been driving. I mean, there are a number of scenarios, but I don't want that $18,302 to potentially jeopardize your decision on the other one.
Would it be safe to say that we could use past performance on item number 2 and future risk on item number 1, and that'd be a safe way to look at each of those items? Or, because I know the first item is probably trending in a positive way.
Were it not for the violence, I would have more confidence in saying, yes, I believe that because that hasn't happened in the past, we would be fine. The X factor here, it's kind of like on the other items. There are some fundamental things that have changed in society that are making us see some claims that we would never have dreamed that we would see. Well, along this, if you're talking about could it happen, well, the X factor is that one person who comes to do harm to someone, and Mr. Bamberg, I don't know.
But our exposure on the second part is limited to that limit up to the 2 million,
Yeah,
2-1.
I mean,
It would hurt, but we are limited. It's not like we're putting an unlimited factor on ourselves, because we do get picked up at the end of that $2 million mark with our excess liability insurance.
I would tell you that the board, of course, I know you believe it, and Mr. Rougeau, please don't say amen to this, but I could spend all of your money on insurance. I could. And so, Mr. Bamberg, I think my best answer is the board's historic appetite for risk has been good. Have we had some exceptions along the way that none of us would have foreseen? Absolutely. Plugging the dam of this other excess really offers me a higher degree of confidence that we're protecting the board's balance sheet. When you get to, would it cripple the board to have to buy 1.1 million? To me, the bigger exposure is a bunch of uninsured buses that could be taken out by a tornado. And so once we step past this option number 1, we kind of get into a conversation of what is our appetite for the things that we don't insure. On this one, I mean, I pray it never happens, but the $1.1 million, the only reason why I'm obligated to present it to you, but also that $1 million of coverage cost $18,000. It was a reasonable offer, but That's about the best I know to tell you.
Okay, thank you.
Yes, sir.
Any other comments? Mr. Wiggins?
Thank you, Madam Chairman. I'm not on the committee, however, I remember a few weeks ago, a few months ago, we had an opportunity to do some things that we didn't do. And we kind of reaped the wind a little bit. So I'm suggesting the advice that this gentleman has given us since I've been on the board has been valid and very effective. So I would suggest that we adhere to that and go along with it because it has been very good for us. And it's better to be safe than sorry. And lately we're being sorry. Thank you.
I have one question. We can choose, if the board decides to later on subsection 2, which you labeled as your second priority in this, we can choose to purchase that at a later date, correct? If we decide your 1A is the most important with that increase in premium, we can, these are not mutually exclusive where we have to take both options and the second option is completely off the table. Do I understand that correctly?
That is correct, and I would tell you that I would expect LUBA to be very flexible with us. If you wanted to wait, regroup, look at whatever budget amendment you may entertain to better prepare for expenses within your self-insured retention, and then make this particular item of the 18302, it's only going to decrease this year. This is a prorated premium. On an annual basis, what I would feel better doing actually is, if we want to get into that conversation, have you see the full annual impact, not just endorsing the policy to the end of the term on March the 7th. And that's part of why I don't want to tell you it's not good coverage to buy, and I don't want to tell you we might never need it, but it is clearly my second tier priority. This other one, I consider to be very important.
So just to follow up, would you consider possibly coming back to speak to this committee and this board as that renewal is coming up and we could have a follow-up discussion on what that may look like for a total annual premium and what our exposure could be?
Mr. Bass, I serve at this board's pleasure, and I will attend any and every meeting that you tell me to do, I promise you.
Okay.
I will obediently be here.
Thank
Mr. Bamberg, did I answer your question, or was that an unsatisfactory
No, you
answer?
did.
I don't
Thank
want to leave anything hanging.
No, you answered it.
Okay.
Thank you.
Any other comments or questions? Are we ready now for a motion?
Motion's on the table. We're calling for the question.
I'll second.
Okay, I have a motion by Mr. Bullard, a second by Ms. Smith. Would you please vote? Passes.
Madam Chairman, I make a motion to reject the uninsured, underinsured motorist bodily injury and property damage coverage from the excess liability policy, and further move to authorize Mr. Frank Rougeau, Chief Financial Officer, to sign on behalf of the Bossier Parish School Board to reject uninsured, underinsured motorist bodily injury and property damage coverage from the excess liability policy.
Do I have a second?
Second.
Is that you, Mr. Bullard? I have a motion by Ms. Smith, a second by Mr. Bullard. Please vote. I guess we vote on that too. Please vote. So moved.
I am very grateful to this board for its patience and tolerance. Thank you for not shooting the messenger yet, but I want you all to know that we did work very hard to secure the very best terms available. Thank you very much.
Well, I'd just like to say thank you to Mr. Rogers. As we all know on this board, he always has our best interests at heart. Yes. And I know for a fact he has been working on this. You and Frank have been working for many months on this. And I can guarantee you that he looked at everything and they got the best deal that they could get for us. So we appreciate you so much. Thank you.
Yes, ma'am. Thank you very much.
Amen.
Thank you.
Okay, committee meeting adjourned.